how a mathematician became the greatest trader of all time.
Nobody holds a candle to Jim Simons. Not Warren Buffett, not Stephen Cohen, not George Soros. Simon's company, Renaissance Technologies, has a signature hedge fund called Medallion that has generated average annual returns of 66% for 30 years. To put this another way, renowned economist Bradford Cornell points out that if you had invested $100 in
most people, well, let me maybe not say most people. I got a YouTube comment the other day. I was talking about how it's up like 54% on the year, and they're like, 54% is not that much. Don't get so excited. And then you see these YouTubers who are like, I made $6 million this year trading stocks. And it's like, okay, first off, 54% is amazing. If you think that's not that impressive, you have no idea what you're talking about. Second, where in the wide world of sports are you coming up with making $6 million this year? Either you had $10 million to start with and you're up 60%, or you're pulling it out of your backside. I would bet since it's a YouTube video, you're probably pulling it out of your backside. But to see 66% over 30 years, that is unbelievable compounding. But, you know, of course, people on Reddit or YouTubes or anywhere else are gonna be like, that's not that much. It's only 66%. Unbelievable returns. And it's real, right? It's not this theory out there. Unbelievable returns that are real.
Medallion in 1988. 30 years later, that would have turned into $398.7 million. What's even more remarkable is that Simons hired people who didn't know a thing about investing.
Is it true that you never hired people from the investment industry?
Never.
He hired mathematicians and scientists just like himself. While traditional investors rely on intuition to make trades, chatting with executives, analyzing earnings reports, gleaning insights from articles, and considering geopolitical events, Simons walked a different path. As a trained mathematician, he believed markets moved in logical ways. So he took a scientific approach to investing, harnessing the power of vast data sets, computer models, and algorithms to make decisions, inspiring a revolution that has swept Wall Street. This is the story of how a mathematician became the greatest trader who ever lived. Jim Simons is always restless. Building a storied career as a brilliant mathematician wasn't enough. Neither was teaching at MIT and Harvard. Neither was working as a Cold War codebreaker. He left Harvard to join an elite research organization that helped America's most secretive intelligence agency, the NSA, decode Soviet messages during the Cold War. But the work didn't satisfy him. As his first wife, Barbara, recalled in Gregory Zuckerman's book, The Man Who Solved...
Hey, I have that book right here. In fact, if you go into my YouTube archives, you'll actually see me interview Greg Zuckerman about this book. So yeah, honestly, an amazing, tremendous book. You don't need the physical book. The Audible is just a fantastic read.
Market. Jim understood at an early age that money is power. Growing up an only child in Brookline, Massachusetts, near Boston, his family doctor encouraged him to consider a career in medicine, remarking, "You're a bright Jewish boy, you should be a doctor." But when Simons shared his passion for mathematics, the doctor replied, "Look, you can't make any money doing that stuff." Simons always wanted to be rich. When he was fired from his code-breaking job for protesting the Vietnam War, he wanted to join an investment bank. He had 3 young children to support, including a son who was born with a rare hereditary condition that affected the development of his skin, hair, sweat glands, and teeth. But he opted to stay in academia for the time being. He was offered a job to head the math department at Stony Brook University on Long Island. While it wasn't as renowned then, here he was at the age of 30 with the opportunity to shape his own mathematics department. While at Stony Brook, he developed a mathematical theory that is foundational to the work of Microsoft and other companies to create special quantum computers designed to tackle challenges beyond the reach
Oh, wow, I didn't know that. That's really cool.
of our current systems, including in AI. As his professional life took off, his personal life suffered. He and Barbara were young when they got married. He was 21, she was 18. They divorced, and she headed west to complete her PhD.
Dude, finding the right spouse, totally off topic here, is like the best investment you can make in your whole life, right? I met my wife my first semester of college. I was 18, she was 21. Similar ages to what they're talking about there. She'd already been in school for a few years before me. And we got married when she was 25 and I was 22. Now, I'm sure at the time my parents thought it was crazy. What are you doing getting married at that point, right? Now we've been together since 2004, so 25 years together. Married for, no, that can't be right. 2004? No, 21 years together. We got married in 2008. So 17 years married. Dude, like greatest gift that God ever gave me was putting that girl in my life. Hands down, no doubt whatsoever. Right. And she made up for all of my faults and has made me a better person because of it. Right. Finding the right spouse at I mean, just an itty bitty baby boy age was the greatest thing that ever happened to me. Right. I would not be here today if it were not for her. So to that point, sorry to go off topic here. But dude, like, man, it is a blessing to have the right person in your life.
PhD in computer science at UC Berkeley. A few years later, a lingering urge nudged Simons to leave academia and venture into the world of finance by starting his own investment firm. His father thought he was making a huge mistake by leaving a tenured position. Mathematicians were shocked and felt he was wasting his talent. But Simons was always unconventional, evidenced by small gestures like not wearing socks because they took too much time to put on. At the age of 40, he left his position at Stony Brook to open up a small office in a strip mall across from a train station near the university. And so began Renaissance Technologies in 1978. Back then, it was called Monometrics, a play on money and econometrics, the use of statistics and math to study economic data. Just as he once unscrambled enemy code, he aimed to decode hidden patterns in the market. Simons remarked to Zuckerman in his book, "There's a pattern here. There has to be a pattern." He didn't care.
So that's one of the cool things about Outliers, that we work in a similar vein here. I'm sure it's completely different under the hood, but we're all trying to find the same thing. How do we save time, make money, and start winning with less risk? Back in 2009, I remember I was working at Raytheon, working in the space and airborne systems. I was working on a project for the Predator and Reaper drones. I was working on the missile targeting systems, MTSA and MTSBs, and I had one classified project that was really cool as well. But one thing I would do in my spare time is try and build mathematical models on the stock market. Like, I loved the idea that I can have some sort of insight based on math to what the market is doing. Now, of course, my models were nothing compared to Jim Simons and absolutely paltry compared to Outlier. But dude, this is a passion of mine. Probably why I love the story so much. I am a giant math nerd. Everybody at Outlier is a giant math nerd, and you know that there's actually some really good money in math.
Care why the patterns existed, just that they did. Renaissance began by trading currencies, commodities, and bonds, but avoided stocks due to their complexity. There are so many of them, and each stock is influenced by the unique circumstances of its company. Simons envisioned a trading system fully guided by algorithms with no human input. Let's say you want to know what the weather will be like tomorrow. You feed a computer the information you have on past rainfalls, temperatures, and humidity levels. The computer model processes the information to predict tomorrow's conditions. An algorithm then advises you on whether to carry an umbrella. Translated to the realm of quantitative finance, the weather data becomes financial data, such as stock prices and trading volumes. The weather forecast becomes a market forecast, and the advice on what to wear translates to a trading decision. On the other hand, a traditional investor might try to predict the weather or the market based on subtle clues in their environment, like how much pain they're in because of their arthritis. As much as Simons dreamt of this kind of trading system, computers in the 80s were just not sophisticated enough to handle a fully automated system. So, at the start, Renaissance relied on math models and human intuition to trade, which proved problematic. His code-breaking colleague Leonard Baum, who now worked at Renaissance, liked to buy low but often clung to positions too long, like in 1984, when he heavily invested in U.S. bonds. But as the Reagan...
So we recently talked about long-term capital management in Outlier University. And the people who ran long-term capital management were literally Nobel Prize winning mathematicians, economists, things like that, like smartest people in the world. And that hubris of being, I'm so smart, I know better than anybody else, was one of the things that ultimately led to their downfall. The humanness of trading resides in everybody, even if you are incredibly brilliant. So getting to a point where you have systematized as many processes as possible is the fastest way to get to profitability. But you have to make sure that you follow those systems, okay? Those systems can prove that they work, but they're never going to work if you throw your humanness into them and break them so they don't work.
Administration began issuing so many bonds, prices plummeted. Simons recognized the limits of human judgment and brought in James Axe, a friend from his PhD days at UC Berkeley whom he recruited to Stony Brook to build more sophisticated math models for trading. The team collected data from as far back as the 1800s, feeding them into computers to uncover overlooked patterns. Simons told a colleague, "If we have enough data, I know we can make predictions." Simons and Axe launched a new hedge fund, Medallion, in honor of the prestigious math awards they'd received. Medallion would eventually become the most successful hedge fund of all time. But at first, it struggled to make a profit. It didn't help that Axe isolated himself in his seaside estate in Malibu. His preference for the West Coast led him to spearhead his new company Axcom, a separate entity yet closely connected to Renaissance. The turning point came when Elwyn Berlekamp, who had worked to crack codes with Simons, bought up Axe as part of the business. He rebuilt the system to focus on short-term trades, which Axe had resisted due to concerns over commission fees. Berlekamp figured, if you trade a lot, you only need to be right 51% of the time. Many investors prefer long-term trades, a sentiment Zuckerman describes in his book this way: like fishermen ignoring the guppies in their nets, hoping for a bigger catch. Unlike these investors, Medallion honed in on these guppies, seeking to capitalize on subtle inefficiencies that others overlooked.
Don't give up easily. Stick with it.
Dude, just look at his posture here. He is in the "I don't give a flip what you think of me" stage. This guy, he's like, "Oh yes, please tell me what you're doing." And this guy over here, in my opinion, he's like the moderator. But Tim Simons is like, "I don't care. I got more money than anybody else in the whole world. Leave me alone."
With it. Not forever, but really give it a chance to get where you're going. And the final principle is hope for good luck.
After a decade of adjusting their algorithms, aided by improved computer processing power, Renaissance turned the corner in 1990. The Medallion Fund posted gains after fees of 58%. But Simons believed they could do even better. He wanted 80% returns. Berlekamp thought he was crazy, and it all became too much for him. He returned to teaching at UC Berkeley. Simons bought Berlekamp's share of the company, and Axcom, which had been a separate entity, disbanded. Going forward, it was just Renaissance Technologies. Simons beefed up the team some more. Henry Laufer, a mathematician from Stony Brook, divided the trading day into 5-minute intervals instead of hourly, allowing Renaissance to quickly detect and act on even shorter-term price changes. Their models were so successful at making trades that they trusted their computers to make decisions that didn't even make sense to them. There was, however, one issue. Renaissance was still very small. It only managed $45 million after 10 years in the business, a quarter of the assets of rival firm D.E. Shaw. David Shaw was also using computer models to trade, and he was trading stocks, unlike Renaissance. Simons knew if he truly wanted to leave a legacy, he had to start trading stocks. He consolidated all operations in Long Island and was about to embark on a new path when tragedy struck. Simon's son Paul, who had battled a birth disorder, was cycling in Stony Brook when he was struck by a car and killed. The elderly driver was so traumatized by what happened that she died of a heart attack a few days later. The grief of losing a child caused Simons to throw himself into his work. In order to master the art of trading stocks, he needed more help. Simons recruited Robert Mercer and Peter Brown, renowned for their groundbreaking work in transcribing speech into text at IBM. They saw language as a probabilistic game where some words likely follow others. For instance, after chocolate.
Oh wait, isn't that exactly what they say ChatGPT is? A large language model where it's like predicting what the next word is going to be. She may say that in a moment, but I feel like we've heard that.
Milk is more probable than cheese. Similarly, Simons wanted to design a system that could predict financial market trends. With their coding chops, Brown and Mercer crafted a single automated stock trading system introduced in 1995, complete with 500,000 lines of code, compared to tens of thousands in the old system. After Mercer and Brown mastered stocks, the Medallion Fund took off. In 2000, it achieved a return after fees of 98.5%.
Dude, that's sick. Now, one thing that she mentioned earlier was that Simons had a target return of 80%. Now, Mark Minervini, he's one of the greatest traders of all time and one of my mentors. He wanted to have triple digit returns for 3 years in a row, I believe was his goal. And he ended up having 300% returns, right? It was not enough to just hit the one home run. He hit 3 more home runs after that. And to that point, one of the things he talks about is don't set an arbitrary number as a goal for your returns, because you may never achieve that, right? Let's say if your goal was 80% and you never achieve that, right? You're going to be working harder and harder and harder. But if you never achieve that, right, are you going to be making trades that you wouldn't have made otherwise because you're like, I have to achieve this 80% goal? We even had a video Tori trades made a while back, which is when I stopped watching her because she is insufferable. She's like, oh, I had this goal, and because I had such a lofty, huge goal, like I was taking all these trades that I shouldn't have been taking, and like I just kept losing money, and I didn't know what to do with myself. Everybody, please feel sorry for me. It's like, who makes? Anyways, when you are trading, right, it's best to just take every opportunity that comes without setting a target, because who knows how high that target's going to be, or who knows how low it's going to end up being, right? But if you're below the target, you're going to be making trades to try and get you to that target that you may not have made otherwise. If you're above that target, you take the opposite stance of, you know what, I've already hit my target this year. Now I can be loose, right? I can be loose with my risk management. Both of those are the bad thing to do. Both of those are bad things to do. Whereas if you just let it play out, let your trades work, see how much you can earn without setting any expectation, you're going to be better off.
Even amidst the dot-com bubble, showcasing Renaissance's prowess in capitalizing on inefficiencies, Simons rewarded his staff with exotic vacations and bonuses. These computer science nerds who were in it for the challenge, not the money, couldn't help but reap the financial rewards. Staff could personally invest in Medallion. In fact, as Medallion grew, it closed its doors to outside investors in 2003 and is only available to employees. The fund is capped at $10 billion. They bought so many mansions in one neighborhood that it earned the nickname Renaissance Riviera. How exactly Renaissance has managed to achieve these stunning results is a secret. Employees are bound by non-disclosure agreements, ensuring they remain silent about the coding and algorithms Renaissance uses. Many firms on Wall Street are trying to crack the Renaissance code. JP Morgan Chase makes it mandatory for new investment bankers and managers to learn coding. With advancements in technology and AI, more datasets can be collected and analyzed, even scrutinizing the tone of voice executives use on conference calls, monitoring which aisle shoppers spend most of their time in grocery stores, or analyzing the social media posts to gauge sentiment. By the way, let's connect on X. I'm at Newsthing. Medallion is the most successful hedge fund of all time. The returns are so high that it charges a performance fee of 44%. Simons had achieved everything he wanted to achieve in the world of investing. He thought about retiring, but then tragedy struck again. His son Nicholas wanted to become a doctor and open up a medical clinic in Nepal to help its poorest people. A week before he was scheduled to come home, he drowned while freediving in Bali. Simons had to bury a second child. For a man who believed so strongly in science and logic, this unbearable loss was a reminder of the inherent unpredictability of life. He threw himself into his work once again to distract him from his grief. Simons launched a larger fund, the Renaissance Institutional Equities Fund, which is available to outside investors. REIF weathered the storm of the 2007 subprime mortgage crisis, triggered by high-risk loans given to Americans with questionable credit. In an unusual move owing to extraordinary circumstances, Simons felt the need for human intervention, guiding his team to reduce equity positions and build cash reserves. Ultimately, Renaissance rebounded, and during the turmoil of 2008, Medallion boasted 82% in profits, highlighting the sophistication and adaptability of their trading systems.
Bro, 82% in 2008. That's bonkers numbers.
Having achieved all that he wanted in the world of investing, Simons stepped down as CEO of Renaissance Technologies in 2009, handing over the reins to Brown and Mercer. Throughout his career, Simons maintained a low public profile compared to some of his peers, yet the spotlight couldn't help but shine on Renaissance because of its new co-CEO, Robert Mercer. Mercer distrusted the government, disapproved of the Clintons, and questioned whether humans are the primary cause of climate change. He emerged as one of Trump's biggest financial backers in 2016, as he felt only an outsider could win the election. The Mercer family also acquired a significant stake in the conservative outlet Breitbart News. Mercer's daughter Rebecca recommended the head of Breitbart, Steve Bannon, run Trump's campaign, while Kellyanne Conway became a familiar face on TV. Together, Bannon and Conway helped propel Trump to the White House. On the other hand, Simons was a significant supporter of Hillary Clinton's campaign. Despite their different political leanings, Simons felt Mercer shouldn't be fired for his political actions. But then it started to affect business. Renaissance programmer David Magerman was horrified by the election of Trump and expressed concerns about Mercer's involvement to Zuckerman for the Wall Street Journal. Investors shared similar concerns. When the Baltimore City Fire and Police Employees Retirement System pulled $32 million from Renaissance, the firm feared a mass exodus. Simon suggested Mercer step down.
Dude, these people were giving up 66% gains a year. Bro, this is how stupid politics have gotten. You are willing to give up 66% gains a year because you don't believe in this person's politics? Are you kidding me? Holy moly. So, politics aside, like this is such a perfect example of how stupid politics have gotten in our life right now. What pension manager who is in charge of making sure that, potentially tens of thousands of people are going to get paid year after year after they've stopped working, looks at this situation and says, "Oh, I don't like that guy as president. They like that guy as president. So we're going to make sure that instead of getting 2/3 return every year, we're going to go with something, I don't know, 10%. That is so stupid. That is so stupid. That is not thinking in the best, the fiduciary responsibility for your shareholders in this case. That is just outright stupid. Wow.
According to Zuckerman, Mercer, quote, looked sad and hurt. In November 2017, Mercer resigned as co-CEO at Renaissance Technologies and sold his stake in Breitbart News to his daughters. As for Simons, with a personal net worth of $27 billion, he can afford to indulge in luxuries like a $100 million super yacht. Yet his wealth doesn't just fund lavish pursuits. He's donated $500 million to Stony Brook University, established a nonprofit that provides exceptional math teachers with additional support, and started a charitable foundation that, among other pursuits, is dedicated to autism research, a cause close to his heart as his daughter Audrey, with his second wife, is autistic. The Simons Foundation is also heavily focused on discovering the origins of the universe. Its observatory under construction in Chile's Atacama Desert will search for gravitational waves from the Big Bang, hoping to unravel the mysteries of the universe's first moments. Perhaps history will not remember Simons solely for being a master of markets, but as a master of the universe. Jim Simons would never have become the greatest trader of all time had it not been for his background in mathematics. Strengthening your math skills is invaluable, regardless
Why do I feel like we're about to see an ad?
of your profession, and there's a free way to boost your skills.
Oh yeah, there we go. So listen, I think the Jim Simons story is super, super interesting. I hope you did too. That's only part of it. Honestly, go grab this book. Right, I'm not going to make any dollars or cents when you go pick up this book or you get it on Audible. Man, it's such a great read. Just super, super good. So that is why Jim Simons is one of my trading heroes. Right, a little bit unorthodox in the way that he did it with math, all behind the scenes. But he wasn't out there trying to cause a spectacle on YouTube. Right, I'm trying to cause a spectacle because I'm trying to help people save time, make money, and start winning with less risk. And because of that, we're getting more and more people to become outliers, and they are sharing those experiences with us about how much money they're actually making, how great it actually feels to be doing the right trades, be putting themselves on the right side of the market, how it feels to open their brokerage account and see win after win after win after win. right? It's a great feeling, isn't it? That's when you know you're doing it correctly. So if you're ready to save time, make money, and start winning with less risk, do it correctly by clicking one of these 2 videos. We'll talk soon.